Hey, I'm Matthew Ma, host of the Truth About Real Estate podcast, and today we are talking with Timothy Lyons, the founder and managing partner of Cityside Capital, a real estate syndication and investment company that focuses on multifamily real estate. Tim is also a lieutenant in the New York City Fire Department, where he has served for about 17 years, and until recently, he also worked part-time as an emergency room nurse at a level 1 trauma center. Excited to talk with you, Tim. Glad to have you here.
Yeah, likewise. Thank you so much for the opportunity.
Yeah, so I wanted to talk to you more and learn about what you've been doing. You've been a lieutenant in the New York City Fire Department, and also you've been focusing on real estate investing. And you mentioned you started real estate about 2 years ago.
Yes. Well, just like you said, been a firefighter for nearly 17 years. I used to work as an ER nurse in a level 1 trauma center. That was my side hustle for maybe 8 9 years, and everything worked out for a while. But then I had three little girls. Now they're 11, 8, and 2. And I was spending a lot of time out of the house, and real estate was one of those things I always kind of wanted to get into. Not sure how to start getting into real estate. So I just dove in. I dove into a three-family rental. Cash flowed on day one. It gave me that proof of concept that I was looking for, that my wife was kind of looking for, and from there we just kind of scaled into multifamily.
Nice. And let's talk about that too. How did you get into the first deal? That's the hardest one.
The first one is the hardest one, right? Whether you're doing
Mhm.
actively or passively, it's always the hardest thing to do. So yeah, I mean, like I had my reasons of why I wanted to do it. I had my focus, and I think that's really important for people to wrap their heads around. It sounds kind of foo-foo in the beginning. If you download any kind of course, they'll say, "Well, figure out your why. What's your focus?" And it sounds a little bit like abstract, but it's really true. Like I needed to find a way to separate myself from spending time and trading that time for dollars. And nothing happens overnight, obviously, but real estate was always one of the things that kept on popping up as a potential source of income, and I had to figure that out, right? So just like anything else in life, I had to get educated first. I didn't want to dive into anything. I'm a super conservative type of guy, especially with like money and investing and values. So I didn't want to, mess up the Lions family, fortune basically, right? So I did what a lot of people do, and I read Rich Dad Poor Dad by Robert Kiyosaki. And
Yeah.
as cliche as that sounds, that really kind of turned on the lights and gave me some clarity on where to move next. And from that, I started taking in an insane amount of content, whether it was audiobooks or podcast or just becoming a voracious reader. And what I found was that my journey is just like a lot of other people's journeys. And I had to basically align myself with people that have done the thing that I wanted to do and kind of rip off and duplicate, right? R&D. And so that's what I did. I read that book July of 19, and by November of 19 I was closing on a three-family rental property. And to me, having that conservative background, the three-family made sense because I could still cash flow if I had one of those units. Well, I can still put it this way: I could still pay my bills, the PITI, and the maintenance and stuff like that, if I had one of the units filled. The other two would provide the cash flow, so that felt safe to me versus buying a condo or a single family property or something like that.
Very nice. And that's a really good point too. And a couple of things I want to talk about here. You know, I totally agree with you what you've been doing, what you're doing, because it's actually cool to see and hear this exact same thing I talk about too. Like, reading Rich Dad Poor Dad is actually really good. I think people need to read it a couple times to really digest it, not just gloss over it and really think about things. If you're a business builder, you're an entrepreneur and you want to build income active or passively, it's a good starting point to really dive deeper into building. And you mentioned being a vicarious learner and learning about, like listening podcasts, watching YouTube videos, reading books. You're actually learning from the heart and soul of people who are talking about it. And that's the best way to learn. Like if I can't have a conversation with a CEO, but a CEO has a book, I can read the book, right? And basically I'm learning right directly from them. And you really can take that in deeply and use that knowledge from everyone with a grain of salt and build your own legacy, right? So that's pretty cool how you did it. You read and you're learning and you actually took action. And to take action from going from no property here to buying a multi-unit, it's not that easy, and you did it within 4 to 5 months of actually saying, "Okay, I'm gonna do this." And that's tough because, like, okay, there's gonna be a lot of challenges being your first property and actually getting into it and then figuring out what happens. But you took the liberty to understand the numbers up front and understand the PITI, understand that you're gonna cash flow, what that cash flow really means, and how 1 out of 3 units is actually gonna provide that and then give you the cash flow after the first unit. That's great because now you're getting 2 units. You can even live in one of them and rent the other one out and cash flow, and that's great. Can you tell me more about that property? What kind of numbers were you looking at when you first bought it in 19?
Yeah, so I mean, I wouldn't use my original underwriting to purchase any more properties,
Mhm.
but it got the job done in the beginning. But yeah, I mean, like, so we would cash flow anywhere from like say over the life of that property. I owned it for just about 2 years, anywhere from 400 to maybe 1,000 a month. And because there was different setbacks, like all of a sudden I needed a new hot water heater, or now I needed to surf. I put new siding and a new roof on the house, and just little things here and there, that would eat into the cash flow. But the bottom line was that it always cash flowed. There was no months where I was dipping into my own pocket, and that was huge for me to have that clarity and that confidence to say, all right, this works. I did a little better on my taxes. I have cash flow. I have proof of concept. Um, so it was a 3 unit building. I had, tenant on each floor with, it was 3 single moms and a couple of kids. And, like I said, it was a 1920s build. So it hadn't had a lot of deferred maintenance. So I put the new siding on, put a new roof on, did some other upgrades to the first floor unit upon takeover because the first floor tenant moved out. So, and I did a lot of it myself, on the inside. On the exterior, I hired it out. Uh,
Oh, you're muted.
Sorry about that. When
Yeah,
you
no
when you're
worries.
when you're doing that like yourself, in the beginning, I was very cost conscious, like how much does every little thing cost, and can I do it myself? And what I found now, getting into the multifamily space and realizing the power of leveraging other people and asking who and not how, and how you can do underwriting to account for all these things. Where is the highest and best use of like my time? Because at the time I did my 3 family, I was still a lieutenant in the New York City Fire Department. I was still an ER nurse in a level 1 trauma center. And I still had 3 little girls and a marriage,
Yep.
and, kids' sports teams to coach and whatnot. But now I was a landlord of a property. And I remember my wife kind of joking with me. She was like, I thought this was going to be like a passive income activity, but yet you're, down at the house, like painting or whatever. And I mean, listen, it was awesome to have my wife as a partner in all this because although she wants nothing to do with the real estate, she was super supportive of me to have the time to
Mhm.
spend doing this stuff, but during this period where I was kind of creating the cash flow, I was getting my proof of concept, my wife was getting it, and I was getting the real estate bug. I had really tuned out everything else. Like I wasn't listening to music anymore. I was like literally, if I had to go to the supermarket 5 minutes away, I would take in 5 minutes of a podcast or an audiobook or some sort of content while I was shopping or driving to the supermarket. And I kept on hearing really, really valuable stories about other people who were cops or firefighters or teachers or accountants or doctors, you name it. And they have a podcast out there about somebody who's doing something within multifamily. And, for me in the beginning, like multifamily seemed a little bit scary, right? It was profit and loss statements and T12s and, above the line, below the line, NOI, cap rates. I'm like, what are these guys talking about? Right. And it sounded like something that a private equity firm down on Wall Street would have to do, not something that a New York City firefighter ER nurse could do. But the more I kept on kind of trying to get educated and reading books and listening to books and doing the podcast, I realized that other people are doing it. So why can't I? And I ended up getting a coach, a mentor in the multifamily space. And I had some insane limiting beliefs around that as well, because this was a paid mentorship. It wasn't like,
Mhm.
hey, I'll work for free and, learn the business from the ground up. Because I wasn't sure what is my ROI going to be, and if I come out of pocket and I don't make any money, like, oh, like, so really kind of wrapping my head around coaching mentorship when I really had some crazy limiting beliefs was the thing that really moved the needle the most for me in my multifamily career. And, not to sound like, foo foo or cliche, whatever, but like it literally collapsed decades into days
Yep.
because not only was I able to learn the language of multifamily, to learn the business, to apply some of that knowledge. Like there's so many people out there that are stuck on the one side of the fence because they're still accumulating knowledge. I need one more podcast, I need one more conference, I need one more seminar, I need one more book. And then they never do the application of that knowledge and they never move the needle. But when you are forced to because you paid money to a mentor or are somehow, bound to this, goal, you take that action. And once I did that, the whole world opened up.
Isn't it amazing how accountability partner, especially a paid one, because you're the pain you get from that actually makes you accountable and actually makes you take action. And if it's, for example, the same thing, if I offer you the same coaching for free, you wouldn't take the action. But if I made you pay for that coaching, you would take the action, even though the content is exactly identical.
That's it. I mean, how many I'm guilty like anybody else of buying like the $97 course and then like never
Yeah.
opening it or the $47 course like and then I'll never open it or I open it once and I'm like, but when you pay a significant amount of money, you're going to be or at least I am. I'm
Yeah.
going to be invested in that outcome.
Very true. And you noticed, as you mentioned too, when you actually work with a real coach who's helping you, guiding you, and putting that accountability on you, you take so much action so much faster, and you're minimizing the years it takes to do it now. And the hardest part is getting started. A lot of people, even Elon Musk says, the hardest part is being an entrepreneur is actually taking the action, executing. Stop having
Yeah.
analysis paralysis and just keep reading the next book, next podcast, and never doing it. You learn on the fly, and it's like people say you're building an airplane while it's going down, right? You're building it while you're learning, and as you keep executing, you get so much better, so much faster, and you don't know what you don't know. And when you start figuring it out and asking the right questions and asking the who, you'll get it done so much easier. And especially for you
Absolutely.
too, like you're busy with being a lieutenant, being a nurse, being a dad, a family, having a wife, having 3 kids. Where's the time there to do this, and the challenges of learning and actually actively doing the work too? And like you said, painting and fixing the housing, interior wise, and going from there. It's tough, right?
It is really tough,
Mhm.
and I'm not a really handy guy. Like if my wife was sitting right next to me, she'd be like, "Listen, I don't even let Tim, hang pictures on the wall in our regular house. Like we'll either have somebody else do it or I'll do it because I'm just not that handy." But I needed to have, like, I wanted to have that education of being a landlord and doing this stuff myself. But then, obviously we can dive into the multifamily aspect of
Mhm.
our business now, but there's so much out there. And I love what you said about, building the airplane on the way down because we don't know. Like, as an
Mm.
entrepreneur, listen, as a firefighter or an ER nurse, like, I just followed the roadmap, right? Somebody kind of always told you what to do or how to do it, or you follow some sort of menu of prescription of if this and you do that, right? If someone's not breathing, you pump air into their lungs. If there's fire, you put the wet stuff on the hot stuff. Like there's always some kind of way to do something. But when you're an entrepreneur and there's nobody telling you what to do or where to allocate your capital or where to spend your time, like it's really kind of tough. And I really had to figure out a system early on in our business. And my brother, who's my business partner, he lives down in Virginia. I'm in New York, so we're doing like a remote work type situation, and figuring all that out. And you think you have to have it all figured out on day one, or at least I thought I did. What you find is that you take a little bit from this coach, or a little bit from that mentor, or a little bit from this colleague, and you kind of make your own business the way that it kind of needs to be. And it's amazing how things kind of fall into place. But then enjoying the journey too. Like I think so many people, when they say, I want to be an entrepreneur, I want to get into real estate investing, they're looking for like that big payday or that big, sit on the beach with a Mai Tai and, call it a day. Like, but really the joy in what I've had to do in the last, like, say 2 years was really building the brand and building the company and seeing what's possible, and then one door leading to another door. So, I mean, that's been the best part of the journey so far.
Nice. Yeah, it's all about the journey. And I think I enjoy the fun. I enjoy the pain actually of learning everything I can learn out there and trying everything and trying to become the best at each particular one. And then learning how to delegate it out to and teach that as well. I see in the real estate space and entrepreneur space, there's a lot of coaches out there and there's not that much education. There's no one set way. Like if you look at fire department, for example, you guys have so many procedures. Nurses have so many procedures. You know what to do in these all these different situations, but in real estate, there's no manual that says here's how you become $1 billion in syndications investing. There's no manual, direct manual, and we all take it at a different approach. And there's all these different types of products, commercial, residential, real multi units. There's different spaces. There's no one way to do it right, and no one has the magic, to make it perfect. But it's fun because you're always learning every single time. Every property is not the same property, even if it was the same builder. It's different, right? You learn from it, but you get a good grasp on how to do it and how to scale that business. When you first bought the 3 unit building, did you guys do it yourself, just you and your wife, your brother, or did you start having people join you to do that investment?
Yeah, so I actually bought it with a friend of mine. Excuse me. Our
Mhm,
wives were
mhm,
friends growing up in high school. So he had an interest in real estate. I had an interest in real estate. I was conservative. He was conservative. He didn't want to lose any money. I didn't want to lose any money. you know, um, it was going to be his first three family, my first purchase in real estate. So a lot of our goals kind of aligned, and I think I wanted to kind of de-risk going in all in by myself and say, all right, let me do this with a partner. He was actually employed in the real estate space, and kind of understood it. And, so we kind of did it together. We did a learning process together. And then obviously,
Oh, you're on mute.
not exactly sure why that keeps on happening. Uh,
That's okay.
anyway, so, when we bought that place, we got it, November of 19. In obviously since then with the pandemic and everything else, like the home price obviously appreciation has been insane in the last 2 years. So we just
Mhm,
called the realtor who's a good friend of ours, and we just said, hey Paige, like, see what you can do with this property, like, because we were in a cash flow neighborhood, we were not in an appreciation market. So we kind of had a number in our head, and we're like, yeah, if we can get it, cool. Well, we weren't even on the market for one day, and we already had an accepted offer um, on the house. Like it was insane. So
nice.
the reason why I did that too was like because realizing the power of going bigger and bigger properties, multifamily, and now that we have our own private equity firm, I wanted to kind of de-risk and break away from the three family and not have to self-manage. Not that I had to self-manage, yes, I could have farmed it out,
Mhm.
but that capital could have been placed in the multifamily or self-storage space where I'm way more comfortable now. Um, and there's a risk premium associated with that. So it was great while it lasted. I mean, we more than doubled our money in a 2 year hold period in a non appreciation market. Um, so yeah, I mean, it was a great start to my real estate career.
Okay, and let's talk about that too. What was the purchase price you guys bought it for?
276.
276. Okay, and when you bought it, what kind of cap rate were you looking at?
So I wasn't even. That's a good question. I actually no one's ever asked me that because as a residential property, the 1 to 4
Mhm.
unit space,
Yeah, it's
we were
different.
really looking, at a different metric,
Mhm,
as opposed to the commercial side. So, I mean, houses in that neighborhood, it was actually in a college town of New Haven, Connecticut, um, and houses in the three family houses in that neighborhood were kind of trading for 300, 315, something like that. But this house, needed some work. So we ended up getting for 276, about 6,100 in taxes. And we ended up buying it with a LLC.
mhm,
And there's a lot of people on Bigger Pockets or a lot of the forums or a lot of articles out there will say, how should you purchase your first rental property or any rental property? Should it be with an asset protection strategy of an LLC, or should it be in your own name, and how many loans can you get in your own name, and all this good stuff? And if you do it on your in your own name versus an LLC? What kind of financing can you qualify for? So there was a lot of stuff to kind of learn. And I think since we were both super conservative guys, we're like, oh well, we have to use an LLC. I don't know that I would have went down that strategy again if I had to do it all over again. But because we bought it with an LLC, we really kind of had to use commercial lending to
Mhm.
purchase the property. So we ended up getting a 10-year note on a 20-year amortization schedule. And our initial rate, I think, was 4 or 4.25. And, that was fine for the time. That was a little bit more than, what the residential mortgages were going for, but it still allowed us to cash flow really, really nice. So, um, we ended up doing a quick claim deed and refinancing because of
Mhm.
the run up in prices. And then we didn't have any anticipation of selling the property at 2 years, but we did a quick claim and we got some conventional financing and you lowered our payment even more and went into that 30-year fixed mortgage product. So I could have sat and held that property for, a long time. But
Yeah.
like I said, it just made sense for us to kind of move on.
Okay. So, for example, if you're holding it for 2 years and then you're getting about 400 to 1,000 net per month, that's pretty good. And you're building appreciation during the same 2-year period. After that, did you guys 1031 exchange it to another multi-unit?
We didn't. We tossed it around a little bit,
Mm.
but I think we had our proof of concept that we both kind of needed. We were both kind of go our separate ways, not because there's any
Okay.
kind of problem, but just because we wanted
Yeah.
to go our different ways. So we just took the cash and rolled it into different projects.
Okay, so you pay the cash and roll different projects. And one thought about that, since I've been doing this for 16 years, is that even then you could have 1031 exchanged it and then split it up the percentages, right? And then buy your own property and then go that route.
You could
Reduce your
have.
tax. Yeah.
The problem is, for me at least, was
Mhm.
that, I could 1031 into a larger multifamily, but I
Mhm.
would need a lot more equity than I had coming out of that project.
Okay.
So there was nothing that kind of fit the timing and what I was kind of working on. And
Yeah.
I kind of wanted to have that control of, I didn't want to outsource it again. I just wanted to have that control of the capital. So, could I have probably done more homework on it? Probably.
Mhm.
But you know what? I really viewed it as a win because it kind of gave me what I needed, and it really got the ball rolling. So I was okay with it.
Yeah, and that's always fine too. And that is a win because you got your first property, you got the proof of concept, you guys cash flowed, you learned a lot in 2 years, you were actively managing the property. And after that property, you went to go on to get into commercial space, bigger properties. And then tell me about that too. What did you buy afterwards?
Yeah. So once me and my brother, got
Hmm.
into the multifamily space and got that mentor. We were invited into a 43 unit syndication in Pennsylvania
Okay.
with my coach, who basically, gave me the opportunity of a lifetime to kind of get a behind the scenes look on how a syndication actually works. And, what does it take to do due diligence and the funding and the debt and all that stuff. So I'll be forever grateful to Chris for giving me that opportunity. And towards the end of that project, when it was time to do the webinar and stuff like that, he said, Tim, do you want to try to raise some money for this deal? And I said, well, Chris, I'm like, I don't think I can raise any money for this deal, but thank you anyway for the opportunity to try to raise some money for the deal. And he's like, no. He goes, obviously you're missing the point. He goes, I want you to come out of your comfort zone. I want you to, learn and see what it's like to try to, raise capital for a deal. Like, how do you talk
Mhm.
to investors? And so I said, all right, man. I said, don't count on me. I still had insane limiting beliefs about raising other people's money for deals, even though I believed in the deal and I was going to invest in the deal. So I ended up raising $150,000 for that first deal with
Nice.
a Yahoo. I forget if it was Yahoo or Gmail account. Individual emails to about 80 people. Not exactly the most process driven strategy I've ever employed, but so we ended up raising a little bit of money, and I think that was another turning point in my career, saying, you know what, like this is really powerful, to be able to leverage my coach, my mentor, to leverage his experience. And at the time, he had done, I think, 6 full cycle syndications. Um, just had a really, really great process, like is a master underwriter and operator. And I just said, you know what, this is super powerful. So with that, the law of the first deal kicked in, and I very quickly partnered on 144 units in South Carolina. And then very quickly after that, again, we did 148 units in Sarasota, Florida on a Class A property. And for each of those properties, we were able to raise over $500,000. Because now we had some momentum behind us and people started to see what we were doing, whether it was on social or I was a guest on a few podcasts and kind of just telling my story. And, people started reaching out and emailing me and, hey, you have a great story, how do we connect or whatever. And, just little by little, the business started to kind of take shape. And, Greg and I came to the end of 2019, I'm sorry, 2020. And we said, like, what are we going to do? Like, now we have 3 projects under our belt. We've raised, I don't know, over $1 million for 3 projects. We got this general partnership, track record now. And are we going to maybe pick up our families and move to a sexy locale like Austin, Texas, or Florida, or Phoenix? And the answer was emphatically no. Our wives would not have that. So, we weren't skilled underwriters. We weren't skilled asset managers at the time, right? We weren't going to be the boots on the ground. I've already told you that I'm not handy, right? So really our kind of spot on the commercial real estate team was capital raising. The problem is, you can't exactly just raise capital for deals. You have to have what's called a material participation in the general partnership. And you certainly are not really allowed to speed date sponsors just to try to raise capital for them. So, although we grew up right outside of New York City and we had a big, kind of capital source in our ecosystem, we had to figure out a way to leverage that, that route of investing in real estate. So what we did was, by chance, we just happened to meet up with a brand new broker dealer that was just kind of getting off the ground, that was going to be focusing on private placement opportunities within multifamily and self-storage. So we ended up, signing on with them, and we had to take 3 exams: the SIE, the Series 82 exam for the Series 82 license, and then the same for the Series 63. And it took us a couple months to kind of knock those out. And the benefit for that was that now we could just really focus on our one thing. One thing that we were good at is raising capital, talking to investors, connecting with people, developing relationships. And now we could do that with the full force and backing of a broker dealer. So we had an underwriting team, we had a due diligence team, we had a compliance team, we had a legal backing. So that's really where Cityside Capital had that little hockey stick, kind of growth that everybody talks about in the entrepreneurial world, was because now we could partner. Like for example, we partner with, 8 sponsors now, 7 multifamily, 1 self-storage sponsor. And some of them are multi-billion-dollar companies who have been doing this for a while. And we're able to, leverage their track record, their experience, their asset management, teams, to bring vetted deals from these vetted operators to our investors.
Nice, and that's a great way to do it too, especially in syndication world. There's so many different ways you can raise capital, partner with other people, JV, and be on GP side of things, and be able to work together to really get into really great projects that you find off market and put the deals together and bring
Mhm.
your investors on board with that, and to utilize each other's skill sets, right? And when you have, asset protection, when you have people who analyze deals, when you have people who are raising funds, it makes it more fun too, because now the dynamic of working with a team is so much easier because you're using each other's skill sets to really focus on what you do best individually. And
Mhm.
like you guys are able to bring that capital to the table and be on a GP side of things and partner with people, and especially operators who do thousands of units. They have the experience, the sponsorship level, the name recognition, and their past history performance. It makes it so much easier to have that with your investors, and over time building that relationship with them and leveling up your own company, your own capital company, works really well. And I think that's fun part of it. And to be able to go to bigger deals rather than say, hey, a 5 to 15 unit, 20 unit, 50, 40 unit, you're going to hundreds of units. And that risk factor is even better because you're de-risking your investment, just being at bigger scale. So that's kind of nice to hear too, right? During the time you're
Absolutely.
raising this capital too, like what kind of challenges do you see when you start talking to your, clientele?
Oh man, Matt, we could probably spend like about 8 hours on this, like because raising capital just isn't as easy as people like make it out to be.
Yeah.
A lot of people will talk about, oh, if you find the deal, the money's gonna
Mhm.
follow. And I would
Yeah.
emphatically push back on that statement because, you know, people just don't throw money at good deals, right? There's good
Nope.
deals all the time. It's really relationship based, and there's really three things that you need to have in any secret sauce to raise capital, and that's you need your investors to have a relationship with you, and they need to know you, like you, and trust you because at the end of the day, a lot of these investors who are wealthy from, maybe they own a business or they're a surgeon or they're in, they had a tech startup or whatever the case may be, their zone of their zone of focus and their zone of fire is not real estate, right? That's my job to present to them. So they need to know me, like me, and trust me enough to come into a deal. They wouldn't be able to on their own, necessarily vet a sponsor, vet a market, vet a deal, whatever. So really, I mean, that has been the challenge, right? So the challenge has been for me personally to really step into the identity of real estate investor because for the longest time I was Tim the firefighter, Tim the ER nurse. I didn't view myself as Tim the connector, Tim the real estate investor, Tim the capital raiser, or anything like that. So I think I was really fighting myself for the first 6 months to a year, and kind of limiting my own growth because I really wasn't. Um, I felt like an imposter. They talk about imposter syndrome. And I think to a certain extent, I'm still constantly trying to, let people know what I do and that I've made a pivot. Yes, I'm still a firefighter, but I also have built, a multi-million-dollar portfolio of, multifamily and self storage. So it's really having the identity, the mindset, and it's establishing relationships, with investors. Because, listen, you can listen to a marketing podcast or read marketing books so you're blue in the face, and they'll tell you that you need 7 to 12 touches before somebody will make a connection or a sale. I would argue that some of those stats just aren't applicable to raising capital. You know, um, I spend a majority of my day just talking on Zoom calls with investors, telling them what markets we're focusing on, how the process works, what are some of our past deals have been like, what are the benefits of multifamily, because once the best type of investor is one that is educated, right? I always talk to my investors saying, look, I would much rather you hold off on your 50, 100, $200,000 investment until you're 100% comfortable with this process, with how the asset class works, because I really don't want them to build their parachute on the way down. I want to be able to provide that, avenue of education and clarity and confidence so that when they do say, Tim, now I'm ready, that they're fully on board.
Yeah, I completely agree with you. I think in the real estate syndication space, it's all about the relationship and the trust and educating and finding the people who want to invest now and the people who are not ready yet to just continue educating them throughout. It can take a month, it can take a year or 2 years, but by constantly providing that value and being a resource for them in the investment space is actually great because one is you really focus on the relationship and building it throughout time. But what happens is when your audience gets bigger, your investor base gets bigger and bigger, you're building a really substantial network. And once those people, even like say 5%, 10% start investing with you, it really becomes a snowball effect over the years. So it's compounding effect where they're going to start seeing what the results. And when they see that result, they're going to tell all their other friends who already have heard about it because your network. But at the same time, now they see the results. They're like, wow, I want to join into that too. Once that starts compounding, like Grant Cardone, for example, it took him years to get to where he's at. But in the beginning, he was going quickly at it. And the more time he put into it, the faster it grew. And it's about creating that audience to be aware of what you're doing, because without it, it doesn't matter, right? No one knows who you're doing, what you're doing, who you are, and they can't trust you, then you're really not raising anything, right? But to
That's
build
correct.
it, it's a marketing perspective, it's an education based perspective of providing value.
Yeah, and like just to stack on top of what you just said, like I didn't realize getting into the real estate space or the capital raising space that marketing would play such a big role. I wasn't a
Hmm.
marketing major. I wasn't a marketing, focused individual. I didn't have that business type background. But marketing, has been a huge part of our business, right? Telling people what we do, explaining the process. How do we get that education in front of people, whether it's a podcast or YouTube or blog post or email marketing? I this was all a brand new thing for me. And what I found was that I actually really like that part of the business. I love talking to investors. I love creating that content. I love kind of, that whole space about connecting with people and hopping on phone calls. And that's all something that I never knew how to do. But now because of this business, I that's what I do all day. Right.
Yeah.
And really, that's the secret sauce to raising capital. It's doing all the little things right. So when you do have an opportunity to talk to an investor who might be ready to invest in real estate, but they don't know what to do or who to go with. You know, um, there's plenty of investors, even large investors that I've actually helped other people kind of get connected with because maybe they want to do industrial and I don't do industrial, or they want to do data centers or medical parks or something like that, and I don't have those opportunities for them, but I want to see them succeed, right? So I'm able to be that connector. So it's just this whole journey has just been so eye-opening and refreshing and purpose driven that I've really enjoyed it.
Nice. And I get it, because like I actually had my syndication company. I actually created a real estate fund about 2 years ago and built it out. And in the last 2 years, we already GP'd with other people and acquired over 558 units, and it's about $80 million now. But to watch that grow, to raise the capital, to work with clients, to build that trust, and to see the track record growing. And once they see these results, their K1s, everything that's happening, the performance of it, they're like, wow, that's great. You're doing that too. And like we have other jobs, we have other things. Like I'm a real estate agent and a coach to all these agents. But to be in this space is becomes more fun, because it's a next level of really investing and growing, and to learn how to use other people's money to scale and leverage together to get something bigger, like a 250 unit, and to grow that to 500 units. It gets amazing, because the result of compounding of, for example, one vacant unit out of 100 is only 1%, right? And realistically, even if you had 10 vacant units, it's not bad at all, because it's only a small percentage. And when you really know your numbers, and you could say, I can scale each unit, raise it by 150, 200, 250 dollars, and then times that by 100, 200 units, that effect is so quickly raises that valuation. It all becomes a numbers game. And then the next level of that is making a community, like turning those multi units into a real community where every neighbor knows each other. They have fun. They have playgrounds, barbecues, parking lots, cityscape the place, right? And it makes it amazing that you're actually adding value into local communities.
There's a whole impact to this type of investing that I think is overlooked. And I think you just did
Mhm.
a nice job kind of summarizing it is that, at the end of the day, people want to make money. Yes.
Mhm.
People want to be invested in real estate. Yes. Right. But once you can see the before and after pictures of some of these properties, and maybe if you could do it at real scale and get two or three of these buildings on the same block or the same little neighborhood, you can totally see how a neighborhood can transform. And it's really, I mean, you're having an impact on hundreds, if not thousands, of people's lives who are those tenants, right? Or people who are kind of invested heavily in that neighborhood. So, yeah, that's an often overlooked piece of this puzzle. But that impact investing is something really that I'm finding like the millennial generation really, really enjoys, and they love to hear those stories. They love to see those pictures on the email updates. So the impact is huge.
Yeah, and I agree, and I like it too. And I started realizing that, hey, I'm not just investing and making money, but I'm actually changing the community, making it better. And I mean by, like, for example, you're improving the buildings, you're changing it, cleaning it up, painting it, taking care of small mom and pops investors who had these properties, but it wasn't perfectly managed, or they had a, property manager who didn't manage it to the best of the ability. But when you take over and say, hey, I renew 150 plus units or more, and I'm like, remodeling each unit, making it nicer, I am changing the pricing, but I'm also asking first, the tenants who live there, hey, do you want to move to this new unit that's been fully remodeled for you and your family? Great, take a
Mm,
look at that. And they do. And by converting that, you're actually giving them a better place to live and enjoy, and turning these older, rundown multi-units into something beautiful, and improving the community and making that better too. So that's a nice part of
love
it.
it.
And adding the playgrounds, adding the swimming pools, the barbecue places, and making it to, you can see the fun and the laughter, and everyone growing up, and now they want to stay there forever. Great.
Yeah, love that.
Yeah, that's
Love that.
a great way to do that. And improving the brand, the quality, right? Changing the lifestyle, turning a C to a B minus or turning to a B is even better. You improve the community. So that's the
Yeah, I
fun part
mean,
of it.
a
Mhm.
lot of the like community engagement projects that some of our operators run, like, they'll like some of the little things are some of the things that mean the most to these tenants, right? So like, taking care of work orders on time, or simply upgrading their lock to a electronic locking system with a key password, a key code password, or something like that. Like, replacing the refrigerator on time when it breaks, or even preemptive, or being like, you know what, you paid rent for 12 months straight on time. Here is an upgraded kitchen package or something like that, and you're really adding value to these people's lives, because at the end of the day, yes, this is an investment, but you know what, that's just a small piece of this puzzle. The bigger piece is on the other side of the people living and consuming that product. So it's just like, it's just another reason why I love kind of being in this space and having that type of opportunity to make a difference.
Exactly. And yeah, especially as a lieutenant and a firefighter, your personality type is like, I care, I want to help people, I want to save people's lives, I want to take action and do things that most people will never want to do ever, right? Step in a line of fire, right? That's scary for most of us, I would say. How do you stay positive with your mindset and like actually keep moving forward, especially when you're raising capital? A lot of investors are not ready yet. They don't know, they're not ready yet. They don't know if they trust you. They don't trust the process. They're not experts in real estate investing anyways. How do you stay positive and keep moving forward?
I think being grounded in a lot of the books that I read about successful people, entrepreneurship, small business, all that kind of stuff, has helped me to kind of keep putting one foot in front of the other, because, everybody sees Elon Musk and Tesla, and they're like, wow, that guy he's a billionaire. He's got this great brand, but, he didn't get there overnight. There was severe setbacks, and companies that didn't make it before he ever started that company, right? So, knowing that and kind of hearing it reinforced on podcasts about success and stuff like that, it's given Greg and I some more clarity as to, what, this isn't always going to be rainbows and sunshine and butterflies. Like, there are some setbacks, right? There's investors, some large investors who commit to a project and they pull out at the last minute, or they don't fund on time, or a project is delayed, or whatever the thing may be, or you commit to raising X amount of dollars and you come up short because you don't have your systems in place. Like, that was early on in our business. That was like, we didn't know if we could raise a million or $100, right? Because we had no clarity into the needs and wants of our investor base, and communicating with them, and all that stuff. So um knowing that Rome wasn't built in a day, but seeing, what our goals are, and reinforcing that, and, focusing on being 1% better every day, and doing the things that we say we're going to do. I mean, it really kind of just snowballs into, uh, so now I can't wait to wake up and actually start, sitting at my desk here, and getting to work.
So let's talk about the daily schedule and like how you get it to work. Like how many people do you talk to a day, and like how much can you raise in a day? Like when you're talking to people and calling them, people are busy, people are working home, people are going back to work now, and you're trying to help engage and provide value during these calls, but it's also hard because people apparently, oh yeah, I can, like right now it's during tax season. Let's talk about it after tax season. Oh, it's end of the year. Let's talk about it next year, and let's look at it how do you keep that momentum going, and how do you engage with these investors?
Yeah, I mean, so again, it was a learning curve, right? Like, so we
Mhm,
have multiple like ins to our funnel, kind of, I guess you could say, via lead magnet or call to actions on our website for setting up an intro call. I've been a guest on a ton of podcasts, and now started my own podcast. So, by putting in the work, over the last year and a half, 2 years of being on podcasts and going to conferences and doing little virtual meetups and, just meeting people that way. Little by little, you start to wake up in the morning and you get calls automatically on your Calendly, link. And I can wake up one morning and I can have, zero phone calls or six, or 10. So it's all kind of, different ways of meeting people and how they get into our ecosystem. But in the beginning, it was friends, family, college roommates, cousins, neighbors, coworkers. But what you find raising capital is that very quickly you tap those people out.
mhm,
They're willing to give you a shot. They're willing to do 50 or 100,000 on a project or two. But then they want to see some results. They want to, be in a holding pattern until maybe something goes full cycle, or maybe they just don't have any more capital to give you. So I think a lot of capital raisers or companies that are doing syndications run into that problem after their first one or two projects. So, that's where the marketing piece comes in. Like, how do you tell people what it is that you're doing? How do you solve somebody else's problem? And how do you tell that story to get in front of people? Because there's so many people that are vying for physician money, engineer money, tech money, financial services money. How do you position yourself as the problem solver for their finances? And that's really, how do you tell your story? And I think people resonate with my story and Greg's story. Being regular folks, firefighter, I think gives me some credibility sometimes to some people, or an ER nurse, being in the trenches, or being a dad, being a family guy, like, just certain things I think I've always, been able to resonate with different people. And again, like hopping on a phone call, I don't expect people to invest with us on after a 15 or a 20-minute phone call. Like, it's establishing that relationship and, hopping on multiple calls after that, and, maybe even meeting up with them for dinner or a cup of coffee or whatever. So, we're still in the process. We only have an investor list of maybe 400 plus at this point,
mhm.
which after like 2 years, it really isn't that bad. But people are in different stages of being ready to invest, and some of them are highly educated and experienced real estate investors, and others are just learning the process. So
Yeah, I think that's part of it too. Taking that massive action and really calling, talking to everyone you know out there, friends, family, colleagues, everyone in your life per time, and then building the relationships with all of them, educating them throughout this time. And I think when you start creating more and more content in events, content engagement, video marketing, providing value, showing them the real estate life cycle, the investment opportunities, things that could happen, and how the whole process works, and providing that educational piece and showing your results over time creates that massive action and helps them see how it can fit into their lifestyle, how that investment can make sense for them. And financially, if it makes sense, they'll start trusting in with that relationship, want to invest more and more with you. And as that progresses, they'll let other friends and family know too. Because if they're making really good money from that, most likely they're going to tell everyone, right? The first time you're going to be really conservative, wait, try it, go full cycle, and then see the result, and then go, okay, this works. I'm going to do more and more. And then if that period they're making more money with you versus something else like stocks or any other opportunity out there, they're going to say, okay, I'm going to put more on this way. And over time, that snowball effect really takes action. But the process as a syndicator takes so much effort, so much massive action, so much time to become a marketing expert, to provide that educational piece, and to wait. That waiting game is hard because, of course, as a syndicator, we want the money now to go invest now because we see a lot of great opportunities now. But we understand it takes time for everyone to feel the same to invest with us at that period, right?
and that's it. That's probably my biggest pain point, is that I wish
Mhm.
I could just, brain dump my knowledge into other
Yeah.
people, right? And be
Yeah.
like, I don't understand how you don't understand, right? Like, because, the problem is, we grew up in a society that valued, saving and going to school, getting a good job, maxing out 401ks, and accumulating money in your retirement accounts and buying that house, right? And saving money in a bank. Like, that's what our parents taught us, because that's what worked for them 30, 40, 50 years ago, or our grandparents even. And it's kind of that paradigm has shifted. And I think anytime a large paradigm shift occurs in society, it takes a long time for everybody to kind of make that shift, right? So, and especially with commercial real estate, just understanding about forced depreciation and tax benefits, and capturing loss to lease, and really driving that operating income as the prime value creation model for how do we make money in commercial real estate. People are stuck with the current news cycle too. Like, oh, well, I heard that appreciation for houses is at an all-time high, so it has to be a correction soon. Or, interest rates are going up. Oh my God, like, real estate has to be risky, right? I mean, that sounds really, really risky right now. And, while there's risk in all investments as a disclosure, right? I mean,
Mhm.
if you are align yourself with the who and not the how, right? If you really align yourself with the experts in that space and know that their track record speaks for itself, and that, you know, these are assets that, institutional money, or international money, they're all piling into, right? Commercial real estate, industrial, retail, multifamily, even some of the more risky assets right now, like the hotels, right? And the hospitality, they took a beating during COVID. Well, guess what? That's when people buy, right? You always heard people
Mhm.
buy when there's blood in the streets. So, now knowing what I know, I'm so passionate about figuring out how to kind of do that and brain dump it out to my audience and my ecosystem, because I think without with the risk of sounding salesy or sleazy, like, real estate is a tried and true asset class. And if you buy it right, manage it right, and finance it right, just like my mentor taught me how to do, like, there's opportunity out there. And are you going to hit a grand slam home run every single time? Probably not. But if you can cash flow from day one, if you can buy a right good asset, you can run it correctly, and you can put the proper debt on the property, there's really not a lot of ways you can lose, in a big way.
Yeah, and I think, yeah, it just comes down to educating everyone about that, because, for example, like, in our lifetime, yeah, from our parents and everything, we didn't learn all this stuff about real estate investing in schools. They don't really teach you this, and even like high school and college, are they really teaching you the business side of real estate investing and building financials? No, I think we need more financial literacy, and that's where nowadays, with that paradigm shift, we're actually, a lot of syndicators are trying to create this content for them to educate them in a different way. Yeah, in general, before, when you're a kid, oh yeah, there's stock markets, things go up and down, you can buy and make a lot of money, but they don't tell you about all the risks behind it. They don't tell you what you don't know, and we're not experts in all these companies, what's happening. But in real estate, it's tried and true. It's been for hundreds of years. People buy, and even institutional investors, they invest heavily in real estate, so we know that's great, and we see that dollar amount, but it's not educating the normal people about doing the same for themselves. So now, as
Correct.
syndicators, investors, we got to educate them and say, hey, here's all the reasons why we see it this way, and take a look at it for yourself, and take your own judgment about how these different vehicles can help your family build up your wealth.
I love that.
Yeah, and that's hard, and people don't realize that. Hey, I do really well in stocks. Well, did you take into all these facts of short-term, long-term capital gains? Where's all the other parts of it, and then how are you scaling that? And where's the residuals on it, and the dividends on it, and everything else? What's the numbers after the fact? Well, I didn't calculate that. I just saw it. I made some money, but what's the tax benefits on that? Nothing. Okay, how's that
Right.
compare? And they go, oh, I don't know, but it's easy. I have free cash flow. I can just put it in anywhere I want today, and I can take it out tomorrow. Like, well, you take it out with the cost, right? And
Well,
then,
yeah, I
yeah.
mean,
Mhm.
yeah, that goes right back to the education piece, right? Like, Rich Dad
Yep.
Poor Dad kind of opened my mind up, but then the cash flow quadrant, which is the next book in that series, it really opens your mind up onto the tactics of what Rich Dad Poor Dad talked about, right? And then once I read that book, it was, let me go read a book on taxes, right? So I read Tax
Mm.
Free Wealth by Tom Wheelwright, and other books like that. And I'm like, wait a minute, like, there's all this information that I didn't know about. And, like, our biggest, by and large, regular Joes, W-2 workers, 1099 workers, gig workers, our biggest expense every year is taxes, but
Mhm.
we don't view it as such, right? So,
Yeah.
right around now, you're going to see a lot of memes or things on social media. Hey, guess what? From January 1st till today, you just worked to pay your tax bill. Like,
Yeah.
isn't that insane? Like,
It is
to spend
insane,
the
and
first 3 months of your year paying for your taxes. Like, that's insane. So, but if you learn ways to minimize that or to use the tax code to its advantage, it's a roadmap to wealth, right? I have not read one page of the IRS tax code, right? But I pay somebody who's very knowledgeable who does know how to do that, and that's my who and not how, right? So, yeah, I mean, that's obviously a touchy subject for me, I guess, taxes.
No, I think it's a great subject. And I wish colleges and high schools would actually teach you these books. They should have these books as courses in life in schools, talking about like Rich Dad Poor Dad, the books, Cash Flow Quadrant, Tax Free Wealth. They should have that in schools, educating about different opportunities rather than the opportunity is get a job, work for your lifetime, take your 401k, retire, and have Social Security. That shouldn't be the norm, you know? So
No.
that's where we come into play. We all have to help each other really, educate, provide value, and let people make their own decisions. But at the same time, educate them on these different things you can look at. And even like tax attorneys I talk to, like CPAs are great, but they don't know taxes as a legal way to save and asset protections. That's the next level
Mhm.
thing people need to understand, and that's where we're all constantly learning about it. So that's another fun opportunity to educate ourselves on it.
Yeah, I mean, just a stack on top of what you just said, right? I mean, I always say, like, if you broke your ankle, you wouldn't go see a neurosurgeon, right? Because they're both doctors, they're both MDs, maybe, but the neurosurgeon's not going to have to take care of your broken ankle. So same thing with CPAs. You can't go to a general CPA or a CPA that is focused on auditing a company. Like, you have to go find a real estate focused CPA that knows the rules, knows the regs, knows the documentation required to maximize your tax savings, right? And then build
Mhm.
you out a blueprint for a 1, 3, 5 year, roadmap of how you're going to take these real estate losses and apply them to your individual situation. So, highly recommend getting around the right people. That are doing the thing that you want to be able to maximize.
Good. And what are some other things you would recommend for people right now to really try to kick out 2022 and get executing?
I think one of my mentors, my de facto mentors, is a guy named Keith Weinhold, who has a podcast called Get Rich Education. And I've been listening to him for 2 years, probably listened to every single one of his episodes. And he talks about the return on your home equity being zero. And I think a lot of people feel very safe when they have a lot of home equity, or it appears that they have a lot of home equity built up. And I would argue that, we don't live in a capitalist society. We live in a creditist society. And, you have to learn how to use leverage in smart and tactical ways. So, I can only talk about what I did, but, if you have leverage, if you have equity built up in your house, maybe figure out a way or a strategy that you can use that to invest in other cash flowing assets so that you can have that velocity of money. That's one thing. Another thing is people just don't realize that they can use old 401ks or 403s and create a solo 401k or a self-directed IRA and use that for not just stocks and bonds and ETFs, but they can use it for real estate. They can use it for fix and flips, private money lending. There's so many opportunities to use your own capital that you didn't think were possible, but they're out there. So those are just two of the things. And then just, get around people that are doing the thing that you want to do. I mean, there's a great quote out there. You are the average of the 5 people you spend the most time with. I'm always trying to be the dumbest person in the room because I think there's real value in surrounding yourself and building a tribe and realizing that you don't have to do this by yourself. There's plenty of groups out there. You can create your own or go join one because there's a lot of people who are moving away from the traditional roadmap of how to save and create wealth, and they're kind of going down a different path.
Yeah, exactly. And I think one last quote too is your network is in your net worth, right? Your net worth is in
Mhm.
your network. So you really working with those people and being surrounded by people like us who are like pushing each other. Even I always want to be the dumbest one in the room because I want to constantly learn how to grow and how to get to the next level. And being surrounded by people who execute every day and push you and motivate you, encourage you, don't put you down, helps a lot too. Because when you see them going so quickly, you want to go quickly too. And like, how do you do this? If you're a lieutenant, you're a nurse, and you're building capital and raising, and you have 3 kids, and you're doing it versus someone who's just sitting here watching TV all day, watching Netflix and just relaxing and not taking action, they're going to be
Right.
surrounded by people like you, right? Who are actually motivated to do this. And they're like, if you can do it, I should be able to learn how to do that too, even at 10%. That would be really great.
Exactly.
How do people reach
Exactly.
out to you? And also, one last thing, what's your
Mhm.
goal for 2022?
So it was to get my brother to go full time in Cityside Capital, but he just made
Mhm.
a career pivot, so that's not going to happen. So it's really centered around raising capital and some of our goals for that. At least $10 million raised. We're on pace in Q1 to exceed that already. So maybe we're not thinking big enough, but I really want to get our podcast, really rocking and rolling. Our YouTube channel, we just kind of started these things 3 months ago, and raising capital and just really kind of connecting with more like-minded folks like yourself.
Cool. Great. And how do people reach out to you?
Yeah, you can hit our website, citysidecap.com, or check us out on our new podcast. It's called The Passive Income Brothers. It's on, all the major platforms, and YouTube, same thing. Just search Cityside Capital and subscribe and check out our content.
Cool. All right, guys. Thank you guys so much for being here on the Truth About Real Estate podcast. We'll see you guys in the next one. Have a great day.
Take care now.